Hey, Trader Steven here with TradersPlan.com. It is Friday, August. It's October the 15th. Trying to get my coffee going. Okay, so today we're going to look at the NASDAQ just like we do every Friday. We're going to look at the overall market, and we're going to look at the top ETFs of the week. There are a lot of new names, and there's a lot of breakouts, especially in the metals. So we're going to look at that. We always look for new trends, right? What is popping in the top 10, so we can try to catch new trends. So let's start with the NASDAQ right here. You know, you have I've been talking about this for weeks. A lot of times when you have these corrections, let's follow this pink line, which is the 20-day moving average. You'll get, we have this sell-off, and you'll get multiple rejections at the 20-day moving average. So you got rejection right there at the pink line. Let me kind of blow this up a little bit. And then you got a second rejection right here, but it comes right back and breaks through. So usually third time is a charm, and that's exactly what happened yesterday. We had a nice day in the NASDAQ. It broke through, still under the 50-day moving average. So, we could bump a little resistance, but I think at this point in time, the fact that, when the market is going to rally, it's got to get above that 20-day moving average. I think you really need to be thinking long at this point in time, because this is a buy signal to me. So whether it works, whether the market comes back, chops around, obviously we don't know. We don't know which signal is going to be kind of the big rally, just like this one, March 2020 of last year. So that's just why you got to take them all, and it pays to be a bull. So right now, I think the market is looking good as of yesterday. It appears that we're trying to get out of here. So let's just follow the lead and see if we can make some money with it. Now, regarding ETFs, there was a lot of new ETFs that were in the top 10. It really, over the last month, has been dominated by banks and energy. And I mean, that has really led. Banks and energy have been going up the whole time the market has been going down. And now there's a lot of new leadership. We've seen this uranium ETF. It really had a monster, I'd say, month from early August to early September, and then it pulled back. And I've been talking about this for several weeks, and I said if it breaks above this 83.59 right here, that was a buy. It did that on Tuesday, and man, it really shot through. And so if you took advantage of that, great. I got some emails saying a lot of people took advantage of that. I mean, just the ETF was up 13% in one day, 8% in another. It pulled back hard yesterday. Right now, the funny thing is, on Tuesday, I told myself, I was like, hey, I'm going to wait till the end of the day, make sure the market doesn't sell off, because during corrections, the market tends to start strong and finish weak. And that really has, I think, saved my bacon through most of the correction. However, it didn't on Tuesday. It just kept getting stronger and stronger and stronger. And at that point in time, I personally wasn't going to chase it. So I was like, shucks. But hey, that's part of it. I trade a lot of growth stocks, and sometimes during corrections, when you have those rules are meant to really, help protect you during ugly markets. And then all of a sudden, sometimes it doesn't work out, right? And that means maybe the market's turning. So you can look at it positive. But, for this one right here, I really think that it needs to pull back a little bit further. I would not chase it right here. I would probably look at it. I'm having pointer problems here. Maybe closer to 86. See if you can kind of get it down in that range. I don't know if it will, but I mean, it's up 20% this week, and URA is up 18%. So it is really shot up. Again, I know it's easy to get excited and FOMO, but it pays to be disciplined over time. Right, so just be cautious. If you didn't get in on Tuesday or early last week, I would just let this ease a little bit, and that way you're not chasing something. Something else that really popped was the clean energy. You got the solar ETF, you got hydrogen ETF or alternative energies. You got this ICLN, like all in the top 10. Very strong. The solar stocks were up 11%. The chart is still ugly as sin. It peaked in February. It has gone nowhere. But, volume has really came in above average volume, I'd say 4 out of the last 6 days. And yesterday there was above average selling, but it was barely down relative to, the up days. So, with something like this, I think that it's going to break through, it hasn't broke out yet. If you want to be a more conservative play, right, you can, well, I mean, if you draw it that way, it's already broke out. If you want to wait till more conservative would be waiting until the 200-day moving average. But me personally, I think this looks good right here. I think this is saying that the market at least thinks there's going to be an infrastructure bill. So I would go ahead and put a buy signal on this with just, I mean, a tight stop. If it doesn't work out, it doesn't work out. But, you know, we run these weekly scans to try to catch trends early. And I think this isn't a definitive breakout, right? A definitive breakout would be really right across here. If it broke out across this line right here, this clear line, and you can see it almost looks like an inverse head and shoulders, right? You got the shoulders and the head right there. So a more definitive breakout would probably be, you know, above 93, above 94 in that range. But that's about 7 to 8% away. So if I see something early and I see volume, I might just swing the bat a little bit early. I think this is worth swinging the bat. This hydrogen ETF, this is really, really thinly traded. So, I mean, yesterday it traded 145,000 shares, but there's just not a lot of volume in this. So I would probably just pass on this for now until some more volume creeps into this. But, I mean, I think you can see the breakout. The breakout looks good. But again, I mean, you're talking on average about 11,000 shares a day. That's really just not enough liquidity. Look at what happened. Look at also what's really crept in. You have copper miners, silver, rare earth metals. I mean, these charts are actually looking really good. You can see right here, I can draw this line. You can see a clear breakout. You can also see right here horizontally a clear breakout. You can see that the relative strength line is rising accumulation in it. I would definitely put a buy alert on this copper ETF. It could get extended quickly, but a nice tight stop, I think with some of these ETFs, you might as well use a tight stop. Could be, you know, below Wednesday's low, right? That 200-day moving average, that black line. So you're looking at about 6%. I don't know where it's set to open today, but I mean, this right here is definitely breaking out, and it's looking like copper could definitely run. We have inflation, and the metals have underperformed. A lot of other commodities, energy has really outperformed. The metals have underperformed. They could be that catch-up trade. So if we go to the silver and the silver junior, this is an ugly looking chart. But now all of a sudden, it got rejected the 50-day moving average twice, and now it punched through. So if this isn't a buy signal, I don't really know what is, because it's breaking out of a downtrend right there. And you have other participation metals, so I also think silver miners looks pretty good. You might have to have a wider stop, because a lot of times when it just pops multiple days, people get excited. It can easily come back and test this trend line. So I would just be careful, but honestly, I think silver is also a buy. So you really have a lot of buys, I think, across the board in some of these metal ETFs. A lot of the copper ETFs look pretty good. You can see that right there. That looks good. That broke out right there. You can see the REMX. This is not really a breakout, but it is back above the 50-day moving average, the orange line right here. So, I mean, that also is looking pretty good, although I think I like copper better. I think just the copper miners ETF is looking just a little bit stronger. It's a little bit more, the consolidation is, it's found support 1, 2, 3, 4 times, and now it's breaking back above. So, what's not to like about it? If I go back down to the clean energy ETF, you can see this one is not as strong as solar. So the clean energy ETFs and the clean energy stocks definitely still have some work to do. And just like everything in this top list right here, they are all really inflationary. Everything from uranium to the rare metals, right, or just the metals, to you have the clean energy. They're all that inflationary trade. Inflationary numbers came out, I think, this morning, and they were not great. So that's just going to be the story. So we continue to look here. So looking at this top 10 again, I would probably, if you made money on uranium, great. I'd sit with it. If you didn't, you missed it, I'd let it pull back. I think the tan, this has just popped too much the last few days. I'd go ahead and like this here, but if you want to be ultra conservative, you can wait till it breaks out above here. But I think copper and silver look really good because, you know, we always talk about stocks have personalities, and personalities can change, right? They can go from good to bad or bad to good. And I mean, this is a really ugly chart right here, but there's a lot of sideways action, and it really broke down. And if it comes right back up, right, failure to fail equals strength. So it's changing personalities where it was breaking down, and now it's back above the 50-day moving average, and you have other broad participation within other inflationary metals. So I think this one looks good as well. Just like anything, right? If you decide to make your own decisions, right, use stop losses. You know, never hold these until they absolutely roll over, because we never know, right? They might work, they might not. So as always, make your own decisions, do your own homework, and I hope this helps.